Good morning. This is the closing update. I'm going to start with a trade that I did, which was partly for educational purposes as well, just to show how you can use higher time frames intraday, which we've been looking at a few of those charts this week, and how you can bring this down to the micro level. So this is the Nasdaq on a 2-minute chart where I did a trade, and this is what a lot of the professionals do. Now, it was the 720-minute support, the final support. It was also a daily level as well. And what I was looking for is price to come down and stabilize. It would have been nice if I got a pattern as well, but it didn't occur. But what was also very interesting to me was the time of day that it was happening. So it was coming towards the end of the first hour of the pit. And I know a lot of crowd following techniques have gone all around the world, and a lot of people use slow stochastics. They'll use the same things basically. And so what happens is you can get selling coming into the half an hour or the hour as it's telling them to either get out of longs or look to get short or whatever. And what I was looking for was any sort of stabilization at that point. Now, earlier in the day, the E-mini had also hit its final support, although it did it out of hours of the pit. And I was looking for any sort of stabilization, and the reason I'm doing that is because my risk is so tightly defined. As soon as I saw an up candle, I said, right, fine, I can buy it here with a 5-tick stop. Yeah. If I'm wrong, it really doesn't matter. If I'm right and it does hold, then just purely on a day trading point of view, I should be able to get something out of it. If I'm looking to strategically trade, then I might be getting a really great entry point that I can hold and take what was a tiny risk and really magnify those profits. So we stabilized, and then all I did was use the normal peak levels on a 2-minute chart just to scale it up. And we went in the end to the first resistance point, which was 87, and we went there to the tick. It stopped, and then we retraced back down, and I took my profit, as it were. I also took some profit after 10 or 12 ticks, just so that I had a free trade. So there's an example of how you can link things together. Also at the same time, as I put out there, Apple had hit its support zone, Netflix had hit a support, so there was a few big stocks that were sort of close. Google wasn't a million miles away from a major support either. Just going to do the E-mini. The E-mini had gone down there earlier on in the day, so 11 o'clock in the morning, held it pretty much perfectly, and then at the same time as the Nasdaq, it came down to the level, and this did actually give a buy signal, although I was concentrating on the Nasdaq and not looking at the E-mini, and away we went. Now moved it back up to a 60-minute, and we could just see it ended up giving a buy signal, but of course your risk would be infinitely higher at that point. Now we've got 24, 30 and 3/4 as support, and we've still got that big level up there at 24.43. Now we have the Nasdaq, again came up with a buy signal on the 60-minute. We're a little bit in no man's land. Moving on to gold, Jeremy talked about 1252 being a pretty important level. We held fractionally above it. It's moved 120-minute support, not major. We're just rotating back up again, but that 1252 remains pretty important. On silver, some major supports have all moved to the lows, so the four intraday time frames have all gone there. So now 1662 is pretty powerful support, and have to watch that pretty closely if we come back down to it. Moving on to currencies, the pound was weak early yesterday, and then we got a pretty hawkish Bank of England, caused a huge spike, but we went to that 28, let's get it right, we went directly to what was 28.98. What's happened is we've rolled over today, so the level has changed because we've moved into the September contract. But it went there directly to the tick, 28.37. That's still our focus, pretty important in the short term. see whether we close above it. 26.77 has moved, is now our major support point. Now we're going to move on to the daily charts, go on to bond markets. There was sales on a huge number of bond markets yesterday, including this one here, the 10-year notes. However, nearly all of them are moving into supports. We had a buy as a continuation the day before, which I ignored, and the reason for that, as mentioned, was because of Treasury bonds. Treasury bonds failed to take out that weekly level at 156.10, and it's also trying to build a sell signal today. So bond markets, for the professional traders who have been strategically long from down here, they really don't have any permission to be long anymore, and if they're very aggressive, they can look to get short certain parts of the curve or around the world. So Bobbles, which is the 5-year German interest rate, is the weakest one really. We had a slam dunk sell. We closed just below daily support, and it's got some space to fall. I traded one that's quite unusual, which is the interest rate or base rates in the UK. It's not something I used to trade professionally, a huge amount, but with interest rates at zero, it's not so interesting as it used to be. But I had a series of bear cages, then a slam dunk, and a double divergence, and 240-minute steps. Got to take out this 40, I think it's a 99.28 level, but with a hawkish BOE, it looks like a trade that got to have. Going back to commodities, crude oil, we know that it stopped just ahead of 44.08 last night. It's trying to build a time continuation buy today, so we have to wait for that to be confirmed. If we look at historical on gold, we've still got this 1257.4 weekly level and also the 1252. So if we can close below there, that's going to give it some space to fall. Moving on to grains, wheat is something that we have a position in. Talked about earlier in the week, it held that monthly level. We were weak early in the session yesterday, and then we reversed all the way back up. It's trying to build a new daily high, which would open up space of around 30 odd big figures. However, there's multiple different types of wheat, and we have Kansas City wheat. Got this big level at 474 and 3/4. Close above there. It's going to open some stuff up. And what's really interesting there is the monthly levels all the way up at 700, and this is from years ago, so they have not moved for a very, very long time. There is a possibility in the next month or so that if we do get an expansion of range, that one or two of these lines could move to the bottom. We've already talked about the time area study setting itself up for the end of the month, so wheat is a very keen focus. Just going to do Minneapolis as well. That's the one that's had the most problems because of the drought up in the upper Midwest. Accelerated higher, took out the monthly, closed above it. Hasn't got anything for another 120 big figures. Minneapolis is a pretty wild contract there. Corn is much quieter. There's different forecast models about what's going to happen. There has been a bit of rain, not significant. Again, we were weak early, and then we've reversed at 384.5 levels. The most important thing. And we'll just do soybeans. Held the monthly pretty much perfectly yesterday, so I talked about that yesterday at 9.26. Low was 25.5. Still got quite a bit of work to do though. Finally, just looking at sectors. Did the scans overnight, and going to look at home builders. I wrote a report on home builders much earlier on the year saying that I think it was when they were coming up to this level here, and then looked at the components within the ETF, and it hadn't really set itself up, but it was probably going to at some point. We're now getting to that point. Home builders is now sector number 4, so it's loved. We've come all the way up to a monthly level, which is probably from a long, long way back. There we go. So over a year ago, October 16. So we're coming all the way back to that level when it's actually loved. The thing that really interests me is a couple of the components. I haven't gone through them all yet, but I looked at a couple. If I type it in right. DHI. Come right up to the monthly level again. We had a bear cage yesterday. It's been going sideways even though it's sector number 4. And then if I do Len, it's almost identical chart. So again, it's come up to the monthly level, got a bear cage signal. So keeping a very close eye on this. Really going to start focusing in on it, and I'll be looking at some of the other stocks, major stocks within it. We'll just do FANG, so let's do Apple, which isn't actually in FANG, but pretty much the same thing. So Apple held that support. Yeah, so if we close below 42.80, we know the story. Opens up 38.62. It's not a million miles away, and that is a very important level. But held in there for now. Facebook. Didn't get to the daily level. Of course, it held it on Monday, but a reasonable performance. Amazon. Pretty nondescript. Just got that 927 level below, really. That's the major reference. Netflix initially held the level, then went through it briefly, and closed back up, and it's actually given us a time continuation buy. So 148.29. I suppose for the really brave, if you want to get involved in that sort of stuff, you know where you're wrong. That's the easy thing. And Google. Didn't hit the daily level, but closed on its highs. I'm just going to do Conoco, which is another one where we do have a position. COP, and when the market was collapsing early on, Conoco was actually up, so it was doing pretty well. Just want to check whether it filled the gap. 44.94, 44.90. Okay, so filled the gap. I would have preferred it not to have filled the gap within the 5 days. So we just have to see what happens there. Of course, we know that crude is trying to give us a buy signal close to a major support. So for the time being, Conoco looks okay. The performance, especially when the market was falling, was pretty good. Okay, I think that's it.